This is Matthew Cratter from Bitcoin University, and today I wanted to answer the question, how much money does it take to moon Bitcoin, to make the price go up a lot? I've been getting a lot of questions, especially related to Milton Demir's tweet here, which has been getting a lot of publicity. And what she does is she adds up all of the assets under management of all these major firms that are moving into the Bitcoin space, like BlackRock, Fidelity, JP Morgan, Goldman Sachs, etc. She comes up with roughly 27 trillion of client assets. And so the argument is, if just say 1% of that 27 trillion finds its way into Bitcoin, that's $2.7 trillion trying to move into an asset that is just 22% of its size. The current market cap of Bitcoin is approximately 586 billion. You add that to the 2.7 trillion that may be trying to find its way in. Maybe we'd even see larger inflows than that at a certain point. You end up with 3.286 trillion. You divide that by 21 million. Now, actually, many coins have been lost. 3 or 4 million coins have been lost. And so the numbers will actually be better than this. But let's assume all 21 million coins are still around or will still be around after the last Bitcoin is mined. And so you divide 3.286 trillion by 21 million. You end up with a price target for Bitcoin of 156,476. Now, I think this is actually a very naive way of looking at the problem for one major reason. And that major reason is that many of us will not sell our Bitcoin at any price. This is a common myth. And the common myth is that it takes $500 billion worth of capital inflows to move an asset like Bitcoin from a market cap of 500 billion to 1 trillion. In other words, if you're at 500 billion, you need another 500 billion to get to 1 trillion. That's simply not how markets work. This is a very common misunderstanding. In markets, price is actually always set at the margins. It's set at the intersection of the marginal buyer and the marginal seller, as we're going to see when I show you a limit order book. And so, for example, to move the price of crude oil from $70 a barrel to $140 a barrel, you don't need huge capital inflows. All you really need is desperate buyers who cannot run their businesses without crude oil, for example, maybe plastic manufacturers, airlines, etc., combined with a seller boycott and someone saying, I'm not selling any of my crude oil because I actually really need it as well. In markets, you often have these limit order books, and the way you read these is you have everyone who's trying to buy the asset on this side, everyone who's trying to sell it at this side. You can see the quantity that they're wanting to sell at each price. So here's 1,103 contracts or shares or whatever this is at 2,800. And then you have the buyers here. You have someone who wants to buy 375 units at 27.97. And so price is set at the intersection here. And what we're actually looking at when it comes to Bitcoin is you can eliminate a lot of these offers up here. A lot of this Bitcoin will just not be for sale at any price. And so what happens is you end up theoretically with a much more lopsided limit order book. Now you combine this fact of market structure, the fact that price is set at the margins here, and you can just have one contract or one share trade, for example. Price is set at the margins. As we said, if you combine this fact of market structure with Bitcoiner psychology and the fact that we Bitcoiners are fanatics, we're not just interested in getting rich, we're also ideologues, many of us. We're stubborn, we're not selling at any price, and our Bitcoin is in deep cold storage, and you can't have it, you can't take it, it's not for sale. So in fact, what happens as time goes on and you get more and more very ideological Bitcoiners, even Bitcoin maxis, as you might call some of us, what this means is there's many fewer Bitcoin for sale at any price. Many of us want to save this for our grandchildren's grandchildren. And so it's really not a question of price. It's more a question of trying to hold on and secure the Bitcoin. And so when you eliminate this part of the order book, you end up with something even more drastic where we could see price go much, much higher. So you don't need $500 million to $500 billion to move the price, to double the price. If you have a limit order book where there are not a lot of sellers and you have desperate buyers who are, for example, trying to hide from hyperinflation, you can have the price go up quite a bit. You could have the price go up $1 trillion with just $100 million of capital inflows. We've been seeing recently too that people are finally learning their lessons. They're no longer holding their Bitcoin on exchanges. The amount of Bitcoin held on exchanges has dropped to the lowest in over 5 years as people move their Bitcoin into cold storage and move them onto hardware wallets. This reminds me of the famous Stanley Druckenmiller story. He's a famous hedge fund manager who used to work with Soros and then has had his own fund and done really well for the past 30 or 40 years. And when he was investigating Bitcoin, this was back, I believe, in 2020, he got a call from Paul Tudor Jones, who's very famous for shorting the stock market in 1987, making a lot of money, another billionaire hedge fund manager. So he got a call from Paul Tudor Jones, and he said, Paul Tudor Jones told Druckenmiller, did you know that when Bitcoin went from 17,000 to 3,000, this was back in 2017 to 2019, when Bitcoin went from, call it 20,000 or 17,000 down to 3,000, 86% of the people that owned it at 17,000 never sold it. And Druckenmiller says, well, this was huge in my mind, so here's something with a finite supply, max supply of 21 million coins, and 86% of the owners are religious zealots. I mean, who the hell holds something through 17,000 to 3,000? And it turns out that none of them, the 86%, sold it. So this is another way of saying the same thing that we've been talking about. And I think the deeper you go into Bitcoin, you realize that even the title of this video is quite absurd and needs to be rephrased. It's not a question of how much money does it take to moon Bitcoin, because it's silly to put fiat money and Bitcoin in the same sentence when they're such different animals. Bitcoin is the apex predator of money. Fiat is a melting ice cube that loses value every single day. And every single government will keep printing it and abusing their populations in this way and sucking out their life energy until their fiat money is ultimately worthless. This is the fate of every single fiat currency in the world. It will eventually become worthless, like Zimbabwe dollars. So the real question is not how much money does it take to moon Bitcoin. The real question is how desperate will people become as they see very high and persistent and long-lasting inflation worldwide, where you're not really able to hide from it by moving to a different currency. The real question is how much monopoly, paper, funny money will people want to convert to scarce digital gold nuggets, which is what Bitcoin is. It's not shiny yellow rocks. We don't need that in the digital age in the 21st century. What we need is scarce digital money that's not controlled by a government or corporation, that's a digital commodity without an issuer, and that can be sent anywhere in the world without censorship and without asking for permission. And this is what makes Bitcoin so special, not just its properties and its censorship resistance, but also, of course, its scarcity. So how much monopoly paper funny money will people want to convert to scarce digital gold nuggets? The answer is 100%. Every last cent of fiat will be seeking a home in Bitcoin before we're done with this. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.